Hi, Dean Jenkins from FollowMeTrades.com here, and I wanted to give a quick update on the market. You know, Greece is in the news. Everybody is paying attention, everybody who follows the market. And uh, on Sunday, July 5th, there will be a national referendum in Greece about whether they're going to stay in the euro or leave. And some people are predicting doom and gloom in the market, and other people saying it does not matter. The truth is, nobody knows. But what we can rely on is, the reality. The reality of the markets are reflected. The reality of what the market thinks about news, any news, is reflected in the price action, in how the price goes up or down. The two things that are indisputable in the market is price, what things sold for, and volume, how many of them sold. And so I pay attention to price and to the story that really plays out here on charts. So I'm looking at the Dow Jones Industrial Average, and if you're following the markets, for 6 years we've been in an amazing bullish uptrend. For the last 3 months, really 3 or 4 months since March, we've been trading in a very narrow channel. This is a very mature trend, and it will end someday, in the not too distant future, and we will start some form of correction. Will it be the Greece news? Who knows? I've got some levels laid out on my chart here, and that are key. And when these levels are broken, then the reality of price will tell us what's going on. So this very first level, right here, this dashed line, it's at 17,579. This is what's called support. This is the range that the market has been trading down to over the last 3 or 4 months. And Monday we had a pretty strong down day in the market, and you see it came down and just touched this line. And so I'm watching. If we break this line, that does not mean that a major correction or bear market is starting, but it's a warning sign. It's a warning. If we break through a low that's been established, it will have my attention, and I'll be looking for the next one. The real key, if it breaks here, heads back up and does not put in a new high and then starts down again, that will tell me that we probably have a downtrend underway. Trends are defined, if you look back here, by higher highs, higher lows, higher highs, higher lows, higher highs. This was pretty low, but it still didn't break the previous low. So higher highs, higher. That's how when we start a downtrend, we will put in new lows, lower highs, lower lows, lower highs, lower lows. So I'm watching for that to happen. If we put in a new low here, go up, put in a lower high, and start making new lows, that will be pretty strong evidence that we're in a downtrend. If we take out this next line here, which is at 17,037, that's a pretty strong support level, and that will be pretty firm evidence that a downtrend really has started. And if we take out this really this really strong low down here put in last October, we're definitely in a downtrend. So we'll watch it. The news will play out. If we break these areas, it could be that a downtrend is starting, and it could be that we go off and start making new highs. This trend's mature, but it could put in a few more minor highs. So that's the Dow. This is the S&P 500 index, and you can see it's pretty much the same story. And I've got levels defined here: a warning at 2039, a stronger warning, pretty strong evidence of a downtrend at 1972, and irrefutable evidence at 1820s. So these are key levels to watch. So you may say, great, Dean, glad to know it. We'll know when the market's in a downtrend, and we will. What do we do? What is there something that we can buy if we're not interested in derivatives and in shorting stocks, something like that? Is there something we can buy when the market goes down that will go up? And the answer is, yeah. I'm going to give you 3 items that you can buy when the market goes down that should have pretty good gains. This symbol here is UVXY. This is an ETF. It trades just like a stock, and it's called the VIX. It's an indicator of volatility in the market. And you see, as the market has gone up, the VIX has gone down, 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 and it's been a very flat channel for a long time. You can see if I expand this, it's starting to perk up just a little bit, coming off its lows. I really got to expand it for you to see. I'll keep going there, and I'll even do this. So you can zoom in and see, let me get there. It's starting to show some signs of life, and I look at this what's called the optimum wave locator here, we're actually starting to go green. So this is really an important indicator. And if the market does go down dramatically, this volatility index, the VIX, is going to go up fairly dramatically. And you can see, it's trading right now at 42.65. Even in recent times, the high has been up here around 250. So when the market goes down dramatically, this goes up dramatically, and you can have trades that double or triple your money. And that's a pretty good instrument to trade. And it trades at very high volume. We're halfway through the day here. Well, the session's going to end pretty soon. So we're almost through the day. 17 million shares, and it has a very deep option market. So you can buy calls or puts and trade this instrument. So there's a good one to pay attention to. The second thing to pay attention to is gold. You don't have to go out and buy gold coins or listen to the late night cable ads. You can just trade the GLD ETF. And this one trades at very high volume too, 3.4 million shares today. And you can see it is channeling and still heading down, but traditionally when the stock market goes down, there's what's called a flight to quality, and people move to precious metals, fixed income instruments, stuff like that. So in all other times when the market has gone down, gold has gone up. And again, we're in a channel here. If we break out of this channel and the market is going down, then there should be some good trades in gold, and we can do really well in this as well. And again, it trades just like a stock. The third thing we can take a look at here is another ETF. This is SPXS, and this is the Direxion S&P 500 Bear 3X. So this is an ETF that is designed to go down when the market goes up and to go up when the market goes down. And you can see it has definitely been going down as the market went up, and it's starting to show some life, some expectation of the market going down. I'll blow this up, and you can see that we put in a high. That was a higher low. It did not take out that low, and now we've got a new high. It's pulling back. So again, if the market goes down dramatically, this is one that could go up. And as I look at the optimum wave locator here, what I see is the amplitude of the bearish waves are getting smaller. The amplitude of the bullish waves, the green ones, are starting to get higher. So again, if the market reacts to the news, whatever the news is out of Greece, and it starts going down dramatically, here's three things that we could trade to the upside and do very well on. It's UVXY, GLD, and XPXS. If you'd like to subscribe to my weekly newsletter, I send an update on these levels and what the market is doing, what the new levels are, and just give an ongoing update so we can know what's going on and follow it and trade accordingly. Thanks.